Hello, everyone. It's Mario from the Montecinos Group, powered by M&M Capital. Going to go over today some recently funded loans. We're going to show a couple of single-family residence fix and flips, in one in LA, one in Orange County, and then also a purchase for luxury investment property in Scottsdale, Arizona. So let's jump into it. Thanks for joining us. So this first one here, this beautiful kitchen, this is a fix and flip. Now, if this kitchen doesn't scream fixer, I don't know what does. So this was a 768 loan amount. This is a higher leverage transaction, so it's 88% loan to cost, so about 12% down off of the total cost. Interesting piece of this is the total loan amount to the after repair value was higher than normal. That was at 80 LTV. Market is typically 70 to 75% loan to value. So we'll dig into that deeper into the analysis of the deal. But essentially, it was 12% down. And they got 100% access to draw to fix up the property, about 80,000 to rehab the property, and this is located in Buena Park, California. As a repeat client, that's purchased as experienced investor that's value adding and selling the property. The middle one here, this section, this is a very nice house in Scottsdale, Arizona, and they end up putting 70% down. So let me run the math on that real quick. So if we had a 2625 loan amount divided by 0.7, so this is a 3.75 purchase price. So 3,750,000. The idea is short-term rental in Scottsdale, Arizona. So we oddly on this one, I think what's unique about this is it was a bank statement calculation. So the individual self-employed with high income and qualifying the property on a debt to income ratio off of the bank statements was advantageous, where they can get a higher loan amount and a very good interest rate on a 30-year fix. So once again, no tax returns, no W-2s. We just analyzed the bank statements the last 12 months and was able to work an income on that. And that's how the underwrite was based off of. Next one over here to the right, this is a fix and flip investor. And this is a repeat client purchasing a property in Long Beach, California. And they put down on this one, it was 86% loan to cost and 77% loan to value off the after repair value. So not what the as is value, but after it's all fixed up. And the total loan amount was 720,000. So this is an experienced investor. They ended up putting down 15% down, and they had access to $145,000 rehab to the property, and 70 was for the actual house, a small house, and then 75,000 for a garage conversion for an ADU. And now we'll jump to diving deeper on that first scenario. So purchase price, once again, this is the fixer kitchen, as you can see. 790 purchase price. They put down 13%, or just over 102,700, so about 102,000. The after repair value, so what the property is worth once it's fixed up, was 960,000, and they can draw on the 80,000 of the rehab budget. So remember, once again, how rehab budgets work and the draw works is you complete the work first, and then you can draw down on it. For example, let's say on a line item, it's 10,000 for demo, 15,000 to pop in new windows. So once the demo's done, windows are in, then you can draw access to that 10,000 and 15,000 in that example. And then once you draw on the money, then you start paying interest on it. So you don't pay interest on it until you actually draw on the money. So that's another good feature of this type of program. The house is a smaller house, smaller to normal size house. It's an old house, about 1,343 square feet on this scenario, and the total loan amount was 768. And I always like to stop and just take a pause. So their loan amount that they're getting up to with the rehab budget is 768,000. They're buying it for 790. So really good leverage on this one. The interest only payments on this were right around, let's do the math real quick. So total loan amount, so you pay off the initial loan amount, so 688,000 So the monthly payment is about 5,016 is going to be the initial. And then as this investor starts drawing down on the 80, then the payment would go up based off what they draw on the property. Now, who the borrower is, the borrower has a good credit score. They're over 700. And the minimum for the program, the minimum credit score is typically 650, ideally a 660. And that allows access to the most highest leverage when you have credit scores at least around that ballpark for credit scores. Now you can go get access to hard money and private money with credit scores below that. Just know that you won't be, you'll have to put down a little bit more money in order to get funding, but you can still get access to funding. This individual is self-employed. Also, the funds came from their business, and they have a silent partner. So that's a lot of what I do see happening. Ideally, the borrower has at least 5% in their name. That way, of their own funds. But they're very lenient with how the funds goes. It's not like traditional finance where we're like, hey, the money's has to be in your account for 2 months seasoned without any large deposits. Private money is not that way. There's a lot more flexibility. They do own a property. They are not a first-time investor. Even though we do allow first-time investors, typically it's 15% down off the purchase price and construction budget. And you do not need to have a general contractor. So the general contractor doesn't have to get paid, and then you get paid. So we pay you directly. So as most of my guys that are doing this are owner builder. Very rarely there's a GC involved. On fix and flip financing. Ground up construction, sometimes that's a little bit more common. It's a bigger project, but that's different financing than what we just discussed here. So recap, we talked a little bit about the private money rehab loan scenario, and then also we did alternative buy and hold. This one wasn't a debt service coverage ratio, but it was an investment property purchase, and we ended up doing that on a bank statement count. If you have any questions, feel free to send me a text and we can set up a time to call. The number here, 562-787-8902. Once again, 562-787-8902. And then also, if you wanted to book a free call, feel free to scan the QR code and set an appointment, and we can hear about your scenario from there. And that is it. Thank you for staying tuned and looking forward to helping out. Thank you.